I want to talk to you today about operational gearing. More specifically, in this video, I'm going to be looking at what operational gearing is, understanding the type of cost that you have in your business, how we calculate operational gearing and why it's important, and how we interpret the level of operational gearing we have and decisions that we can make as a result. Hi folks, my name is Mahmood. I'm an accountant, I'm an educator, author of the book I Hate Numbers, and my mission over the last 27 plus years of being in business and helping thousands of business owners has been to increase their financial awareness, help them win more battles than they lose for what goes on between the ears, help them and you make more money, save time, and have the business that you aspire to. Let's crack on with the video. Operational gearing is the relationship between your fixed costs and your total costs. Effectively, it measures what amount, what proportion of your overall cost that you have in your business is made up of fixed costs and how much relates to variable costs. Let's explore the idea of what those costs are. Now, fixed costs, as the name would suggest, are constant, they're fixed, and they do not change, they do not fluctuate over a period of activity. So for example, if you are driving a vehicle, driving a car, doesn't matter how many miles you drive that vehicle, the insurance cost will remain unaffected. The car tax remains unaffected as well. Those are fixed costs in the context of driving a vehicle, the activity being the number of journeys or the number of miles that you travel. If you look at fixed costs in relation to selling activity or production activity, if your business sells product, provides services, your fixed costs may be things such as salary costs of your staff, the rent of the building that you occupy, the depreciation on all the equipment that you have. If you sell zero or you sell a lot, those underlying fixed costs will not change in the short term. Variable costs, on the other hand, are those costs that fluctuate according to the level of activity, the level of business that you undertake. So we go back to our earlier car example. If we do not drive that vehicle, if it stays static, parked on the outside forecourt on our drive, then there is no fuel costs to incur. The more we drive that vehicle, then the fuel costs that go into that vehicle will go up accordingly. Those are your variable costs. In a business like a retailer, the items of stock, inventory purchased in and sold on again, they'll fluctuate according to how many customers buy goods from us. If you're a manufacturer, the raw materials that you're consuming, the raw materials that you're using will fluctuate according to how many products that you're manufacturing to go off and to be sold. If we then look at the overall total, if your fixed costs represent a higher percentage of your total costs, then your company is said to be highly geared in operational terms, or high operational gearing. If perversely, the proportion of fixed costs is relatively low and modest, then you've got low operational gearing. Now, good or bad for that level of gearing really depends on a number of factors. But let's remind ourselves, and let's reinforce the idea of why it's important to understand the level of operational gearing you have in your business. Gearing is fundamentally a measure of risk. It's an indicator. So for businesses that have high levels of fixed costs, they are said to be high levels of operational gearing. Conversely, ones that have a low proportion will have low operational gearing. And why it's important is impact on profitability. So for those businesses that are facing a very tough climate in terms of selling product, in terms of production, then a drop in sales, a drop in demand with high operational gearing means that your profit drop will be much more dramatic. Going from a positive profit situation to a loss-making situation is going to be far more rapid for a company that's highly geared in operational terms. Perversely, if you've got low operational gearing, any drop in sales is not such a dramatic impact on your profitability, and that's going to be good news in that context. However, if you flip it to the other side, companies that are highly geared in terms of high levels of fixed costs, when sales go up, demand goes up and they're selling more, they will make a higher level of profitability. If we think about that paid member of staff, if we have a hike, an increase in what we're selling, those salary costs will not change. And therefore the amount of profit that we can generate will be much greater. Companies that have got a high proportion of variable costs, the opportunity to make more profit is severely diminished if your sales line is going upwards. Now the calculation methodology, folks, please do check out the show notes, check out the link on the Numbers Know-How platform, the platform that's there to help you grab hold of your finances, to help you produce that financial plan that represents your path forward, is part of the resources that we have on the platform, part of the site. So let's recap what we've got. It's important to understand the level of operational gearing in your business. It's a must do, not it would be a nice to. Understanding your cost structure helps you make those effective decisions. If you decide that your business is highly geared, has a high level of fixed costs, then you can do something about that to modify that cost structure. If your future looks optimistic, if your sales are going up, you're producing more product, then actually having a high burden of fixed costs may be to your advantage. It also reinforces the level of risk that you're prepared to undertake. It's important when you're planning, when you're putting your cash flows together, to understand that cost structure. So therefore, appreciating what your operational gearing is a win-win situation all round. Folks, I hope you found this video useful. I'd love to hear your feedback. Do you understand and do you know what your operational gearing is in your business? How do you use that? And until next time, folks, have a safe week.